We're embarking on our 13th lesson of a series of 19 lessons on the truth about personal finance, what the Bible and historic academic research say is the best path to God-honoring financial independence. Our guiding verses for this study are Job 22:21. Submit to God and be at peace with Him. In this way, prosperity will come to you. And from Hebrews 11:1, faith is being sure of what you hope for and certain of what you do not see. And from Deuteronomy 8:17 through 18, you may say to yourself, my power and the strength of my hands have produced this wealth for me. But remember the Lord your God, for it is He who gives you the ability to produce wealth. And finally, from Job 21:16, but their prosperity is not in their own hands. I'm Ron Fisher, and I'll be giving today's study. Our study today is the best way to purchase a home. Our guiding verse for this study is Hebrews 3:4. For every house is built by someone, but God is the builder of everything. And from Isaiah 32:18, my people will live in peaceful dwelling places, in secure places. Let's start that over. Isaiah 32:18, my people will live in peaceful dwelling places, in secure homes, in undisturbed places of rest. Readiness to buy a home. Buying a home is a complicated transaction, and becoming a homeowner is a major investment that requires careful planning. Consumers should take a hard look at their finances to make sure that they can afford to take on the financial responsibility. A little preparation can go a long way and help you approach this major decision with confidence. We read from Isaiah 4:6. It will be shelter and shade from the heat of the day, and a refuge and hiding place from the storm and rain. Make sure you're ready to buy, both emotionally and financially. Teresa Mears writes, look at your life, your career, your finances, and your future expectations, and determine whether buying a house is the right move at this time. Forgo buying a home until you are ready to put down roots. God desires us to settle in homes. We read from Jeremiah 29:5 and Jeremiah 29:28. Build houses and settle down, plant gardens and eat what they produce. And from Hosea 11:11, I will settle them in their homes, declares the Lord. It is generally recommended that buyers plan on keeping their homes for at least 5 years or more to increase the chance of getting a good return on their investment. This gives you the opportunity to cover your closing costs and makes it less likely that you would have to sell in a market downturn. It typically takes several years for a house purchase to actually pay off. That's due to the high upfront cost of buying a home as well as the regular expenses of home ownership. Emergency fund. Before considering a purchase on a home, you should have 3 to 9 months of emergency savings set aside in an online high-yield savings account or money market mutual fund. This emergency savings fund should be above and beyond your planned down payment on a home and your closing cost. Review your credit first. Go to the annualcreditreport.com website and get a free credit report from each of the major credit services, TransUnion, Equifax, and Experian. Examine your credit reports carefully for any errors. Gina Pogel writes, Many credit reports contain erroneous data which can lower your credit score and cause you thousands of dollars or even keep you from getting a loan. With less than 20% down, the lower credit score, below 680, you will also see higher costs for private mortgage insurance. Review your credit first. The Motley Fool recommends to get the most competitive mortgage interest rate and the most affordable loan, you'll need a good credit score. 1 in 5 people have errors on their credit report, and these errors could result in your score being lower than it should. Also find out your FICO score, a 3-digit number between 300 and 850. FICO defines the good range as 670 to 739. The score is what most lenders use to determine the terms of your mortgage, how much interest rate they plan to charge you. Mary Aline Laponzi writes, spend time to get your credit in the best possible shape so that you can get the most favorable terms from lenders. Don't give out your Social Security number to every lender to review your FICO score. Simply ask the first lender what your score is and pass that information on to other lenders. Lenders save the best interest rates for home buyers with the best credit scores. Deborah Kearns writes, if your credit score is below 620, you will have trouble getting approved for a conventional mortgage. To qualify for an FHA loan, you'll need a minimum credit score of 580 to use the program's maximum financing of 3.5% down payment, or a minimum score of 500 with a 10% down payment. If you have obvious credit issues, a history of late payments, debt collection actions, or significant debt, it could mean less than ideal interest rates and terms, or even outright denial. It can take at least 1 year to improve a low credit score. Boost your credit score by paying bills on time, making more than the minimum monthly payments on debts, and not maxing out your available credit. Some states offer grants to help with a down payment or closing costs, especially for first-time home buyers in certain public service professions. You may also qualify for FHA or VA loans that impose fewer requirements on consumers trying to get into a home for the first time. Save for your down payment and closing cost. Luke 14:28-30, we read, suppose one of you wants to build a tower or home. Won't you first sit down and estimate the cost to see if you have enough money to complete it? For if you laid the foundation and are not able to finish it, everyone who sees it will ridicule you, saying, this person began to build and wasn't able to finish. Ideally, it would be best to try to save 20% down payment, or better yet, buy your home for cash. But that is just not possible for most of us. Marilyn Laponzi writes, as the Consumer Financial Protection Bureau says, in general, the less money you put down up front, the more money you will pay in interest and fees over the life of the loan. And if you put down less than 20%, be prepared for private mortgage insurance premium as a part of your escrow. Save for your down payment and closing cost. You can use a gift from a relative or friend towards your down payment. However, many loan products require a gift letter and documentation to source the deposit and verify that the donor isn't expecting you to pay back the money. The Motley Fool writes, You need a down payment which can range from as little as nothing for a USDA or VA loan to 3.5% to 10% for FHA loans, and from 10% to 20% for conventional financing. But that's not all. You'll still have to pay loan closing costs, which can cost a total of about 2 to 5% of the home's purchase price. There are also other items, such as escrow accounts for homeowners insurance, property taxes, and PMI if necessary. Private mortgage insurance typically costs between 0.5 and 1% of the entire loan amount. Save for your down payment and closing cost. Home buyers in the United States pay on average $5,749 for closing costs, according to a 2019 survey from Closing Corp, a real estate closing cost data firm. Understand that closing costs before you close on a home. There are required expenses, including loan origination fee, home appraisal costs, the cost of a home survey, title and insurance premiums, prorated property taxes, transfer taxes, and more. It can take some potential homeowners 2 to 3 years to save for the down payment and closing costs, above and beyond their 3 to 9 month emergency fund. Adding closing costs to your mortgage loan is a really bad idea. Not only will you end up paying interest on closing costs over decades, but it could trigger PMI if you're borrowing more than 20% of the home's value. You need cash reserves. Gina Pogel points out you also need cash reserves. Then there are also reserve requirements. Many lenders require borrowers to have enough in the bank to pay their mortgage for at least 2 months if they have an interruption in income. If you have a fully funded emergency fund, you have this covered. Furthermore, you may need to make deposits to utilities and cable companies and the like to start services. Teresa Mears writes, "Don't spend all your cash. It costs money to move, change locks, put down utility deposits, and buy things like lawnmowers. If you don't have cash for a down payment, closing cost, and an emergency fund, you may be better off waiting to purchase a home." Organize and update your documents. Mortgage lenders are going to want to get a thorough picture of your financial well-being before offering you terms on a loan. Keep all of your documents, bank statements, W-2s, deposit records, tax returns, pay stubs, retirement and brokerage account statements, organized and updated so you can provide documentation when the lender requests it. When you apply for your mortgage, the loan application will be reviewed with a fine-tooth comb. Anything you claim on your application will be verified and must be documented, including your income, any assets you're using for a down payment, closing costs, and those for reserves. If the source of your down payment is a gift from family or others, you'll need a gift letter from the donor, preferably notarized. God's word tells us that we are to get our income ready prior to building a home. When recorded in Proverbs 24:27, we read, "Put your outdoor work in order and get your fields ready. After that, build your home." Homeowners insurance. Homeowners insurance is something that the mortgage company will not let you go without. The cost of homeowners insurance will be escrowed and become part of your monthly mortgage payment. We read from Job 20:28 through 29. "A flood will carry off his house, rushing waters on the day of God's wrath. Such is the fate God allots to the wicked, the heritage appointed for them by God." And from Proverbs 15:2 and Proverbs 15:25, we read, "The Lord tears down the house of the proud." Apply for a mortgage with a few lenders. You should apply for a mortgage with a few lenders to get a better sense of what you can afford and clearer comparisons of loan products, interest rates, closing costs, and lender fees. You will need to actually contact lenders and get the loan estimate disclosures, formerly called the good faith estimate of closing costs, which are actually interest rate and fee commitments from lenders that they must honor. The Consumer Financial Protection Bureau says nearly half of mortgage borrowers don't shop around and fail to look for a better mortgage rate. Shopping for a mortgage puts you in a better position to negotiate with lenders to get the best deal possible. As you shop lenders, pay attention to fees and closing costs. There are a few fees that have the most wiggle room for negotiating, including loan origination fee, application fee, broker fee, and underwriting fee. Keep in mind that some lenders will offer you discount points, a way of buying down your interest rate up front. You'll pay for these points at closing to secure the lower interest rate. When you buy a mortgage, you'll have the option of paying points. A point typically costs 1% of your total mortgage amount and lowers your interest rate by around 0.25%. To determine if you should pay points, see how long it will take to break even from the upfront cost. Understanding points is essential to deciding whether to pay them and to make certain that you are comparing apples to apples when shopping for a loan. The Motley Fool writes, "The reality is there can be huge differences in terms from one lender to another, and when you're taking on such a large debt, even subtle differences in the interest rate affect your finances in big ways." To get the most affordable mortgage and apply with multiple lenders, compare offers and pay attention to details, such as whether you have to pay points to get a lower interest rate. Look for a loan that has the lowest total cost, including closing costs and interest over time. Mortgage loans to avoid. Mortgage loans with a balloon payment and interest-only mortgages are two examples of high-risk loans, but there are others, including adjustable rate mortgages, or ARMs, you couldn't afford if rates go up. ARMs have lower initial rates than fixed-rate mortgages. Interest rates on these mortgages reset periodically. When that happens, your rate could rise, making your payments larger. If you don't understand the terms, don't sign for the loan. Marilyn Laponzi writes, "Avoid interest-only loans and be careful about using an adjustable rate mortgage, especially in an inflationary environment. They begin with low payments, but the interest rate adjusts higher later as can take the payments skyward. A fixed-rate mortgage, on the other hand, gives stability, security, and peace of mind." If a budget allows, shorten your term. If you can afford a 15 or 20-year fixed-rate mortgage instead of a 30-year fixed-rate mortgage, without strapping your monthly cash flow, by all means do it. You'll be mortgage-free that much faster. If you think a 30-year fixed rate is better for your overall budget, you can always add extra principal amount with each payment to accelerate prepayment of the mortgage loan. Excuse me. Get a mortgage pre-approval letter prior to shopping. Get a pre-approval for a mortgage, a process where you actually start a mortgage application with a lender and receive a conditional commitment for a mortgage. This is vital in an active and competitive housing market. Sellers are more likely to consider offers from buyers who have a pre-approval letter from a lender. A seller feels more confident selecting a bid from someone with a mortgage pre-approval. The pre-approval letter also includes an expiration date, usually within 90 days. How much should I spend on a home? As a general rule, it's best to limit your housing costs to 25 to 30% or less of your take-home pay. That 25 to 30% figure should encompass not just your actual mortgage payment, but also your escrowed property taxes, homeowners insurance, and private mortgage insurance if you're not putting at least 20% down on the mortgage. Oftentimes, the property taxes, homeowners insurance, and PMI are escrowed by the mortgage servicer into an account and become part of the PITI, principal, interest, taxes, and insurance, or one lump sum monthly payment. To play it even safer, you might even decide that the 25 to 30% limit should include ongoing maintenance costs. How much should I spend on a home? When a lender tells you you can borrow up to $300,000, doesn't mean you should. Typically, the most prospective homeowners can afford a loan amount between 2 and 2.5 times their gross annual income. Buying a more expensive house than you can reasonably afford can land you in trouble if you have to stretch your monthly budget to make mortgage payments. In other words, you might end up feeling house poor and experience buyer's remorse, and stretching your monthly budget will eat up your cash flow for other financial goals. The bank sets the maximum limit based on the limited financial information available, but doesn't understand the entirety of your financial life. Borrowing up to the bank approval limit may stretch your finances and set you up for catastrophe in the event of a job loss or uninsured disability. Consider shaving at least 10% off the bank appraised amount and use that as your maximum price when home hunting. How much should I spend on a home? A mortgage qualification calculator can show you how a comfortable payment translates to a home purchase price. Maria Janganathan writes, figure out how much house you can afford. Use a home affordability calculator to get a ballpark estimate, and then be even more conservative. Make sure you're focused on what the monthly payment looks like for that mortgage versus the overall loan amount. Then you can refine your search to affordable properties that won't break the budget. Excuse me. Maury Backman writes, why shouldn't you spend more on housing? It's simple. You exceed that 30% threshold, you might struggle to cover your remaining bills, not to mention your homeowner costs themselves. And that puts you at risk for racking up dangerous credit card debt or even potentially losing your home to foreclosure if it becomes too difficult to afford. By keeping housing costs on the lower side and buying a home well below the top of your price range, it gives you leeway for other important financial goals. It will allow you to steadily fund your retirement accounts, pay for child care, fund a college 529 plan, and a host of other things that would have not been possible if you bought a more expensive home. Buying a less expensive home gives you the option to spend more money on things that bring you joy, like traveling, giving your kids the opportunity of enriching activities, and dining out. If you would rather spend your money experiencing life outside the walls of your home, keeping housing expenses low should be a priority when house hunting. Stacy Johnson reiterates the importance of not buying too much home when he writes, If you let vanity replace common sense, you buy more house than you need, leave no margin for error, and end up furnishing, heating, cooling, maintaining, and paying taxes on rooms you don't use. Determine what you need as opposed to want, and spend as little as possible to get it. There's no reason to create unnecessary risk by over-leveraging. Home maintenance costs. Estimate around 1% of the value of a home will be spent on repairs each year. The expense many new homeowners are not prepared for is maintenance, which averaged about $3,000 a year in 2020, according to Home Improvement Marketplace Home Advisor. Neglecting maintenance comes with consequences. We read in Ecclesiastes 10:18, through laziness the rafters sag, because of idle hands the house leaks. Location, location, location. Determine where you want to live. Dima Williams recommends home shoppers moving to new areas should consider renting for a while, even if they have the means to buy a house. This strategy allows would-be homeowners to test drive a neighborhood, its schools and amenities. Renting gives you the flexibility to make the right decision. The single biggest decision anyone has to make is, where do I want my family to live? If you don't know, renting takes a little bit of the pressure off. From God's Word, we read in Genesis 34:10, live in it, trade in it, and acquire property in it. Excuse me. And from 2 Samuel 7:10 and 1 Chronicles 17:9, and I will provide a place for my people and will plant them so they can have a home. And finally, from 1 Chronicles 17:8, I, God, have been with you wherever you have gone. Teresa Mears writes, choose your location first. Decide exactly where you want to live. Talk to friends, coworkers, and neighbors in their prospective neighborhood. Go to open houses. God promises to help us with making this decision. We read in Acts 17:26, He determines the times set for them and the exact places where they should live. And from Joshua 14:9, the land on which your feet have walked will be your inheritance and that of your children forever, because you have followed the Lord my God wholeheartedly. Consider resale value. Consider resale value before you purchase a home. There are certain features that make houses more or less likely to appeal to buyers. Location is a big one, as few people want to buy the best home in the worst neighborhood. School districts, the general property market in your area, and a home's condition can impact retail value. It is better to buy a lower-priced home in a nicer home neighborhood, as this will lift your future's home value. From Judges 18:10 we read, a spacious land that God has put into your hands, a land that lacks nothing whatever. And from 2 Chronicles 14:7 we read, "The land is still ours because we sought the Lord our God, so they built and prospered." And from Genesis 47:27, "They acquired property there and were fruitful." Determine the location and price and use the internet. Look for homes on the internet, evaluating style, size, price, and how long they stay on the market. Best overall website is Zillow. Most accurate website, Realtor.com, or the multiple listings service. Best mobile app, Trulia. Best foreclosure app, Foreclosure.com. Best for sale by owner, FSBO.com. According to the 2020 National Association of Realtors profile of home buyers and sellers, 51% of buyers found their home they purchased on the internet. 28% found the home they bought through their realtor. And 7% found the home they bought through a yard sign. Finding a buyer's realtor agent. For most people, it is a mistake to go it alone through the home buying process. If you're a buyer, there's no reason not to use a real estate agent, as their fee is paid by the seller and split between the seller and buyer's agent. There has become a rule that may change this actual allotment of fees. And I'm not sure how that's all going to work out going forward. You want people who have worked and have experience directly in the area you are looking in. After you've found the house, you'll most need the agent both to structure and present the offer, and then troubleshoot issues that arise between contract and closing. A good agent can direct you to hot properties entering the market and generally smooth out the bumps that may arise. Miranda Marquette writes, "A good buyer's agent is legally required to help you, the buyer. Look for a buyer's agent solely focused on finding you the best home. Also pay attention to whether the agent listens to you and makes you feel comfortable. If you get an agent that isn't a good fit, don't be afraid to walk away." What to look for when evaluating homes. Teresa Mears writes, "Know what's important to you. If you're on a first-time buyer's budget, you have to be realistic about what you can afford. No house will be perfect. So where are you willing to compromise? Excuse me. You might have to choose between a smaller house in a specific school district or close to work, or a larger house with a longer commute in a newer neighborhood. If you find 85% of what you're looking for, you're doing a pretty good job. When you look at houses, focus on the right things. Focus on the things you can't change. For example, you can't easily add another bedroom, a better location, or more functional floor plan. Even for easy updates, evaluate how much the work will cost and if you have the skills to do the work yourself, or whether after closing you'll have the cash to make the changes right away. Be ready to move on a contract once you find the home you want. Good homes that are well priced nearly always sell quickly. Make sure you base your buying on the reality and not emotion. Some people see a house they love and their planned budget goes out the window. writing a purchase agreement. The purchase sale agreement you enter into sets the terms for much more than just the total you'll pay. The contract should contain contingencies to protect you in case the house fails a home inspection, or you can't get financing, or you can't sell your current home. Consider what contingencies you want in the contract or you're willing to waive. A purchase offer is usually contingent on a satisfactory home inspection, approval of your mortgage, and an appraisal that is equal to or greater than the purchase price. The Bible instructs us to offer a fair price when it says in Leviticus 25:14, if you sell land to any of your own people or buy land from them, do not take advantage of each other. Insist on a home inspection. Regardless of whether you're buying new construction or a historic home, you need to have it inspected before finalizing the sale. Don't trust your own judgment. A professional will be able to point out possible code violations, safety threats, and structural damage. Dory Zinn writes, during a home inspection, a professionally trained inspector visually and physically evaluates the entire structure from the foundation all the way up to the roof, looking for potential defects or red flags. To make the most of the inspection, try to walk through the house with the inspector so he or she can point out potential problems and you can ask questions. Many inspectors share pointers for taking care of your new home and provide written information regarding care of your home. Insist on a home inspection. We need to thoroughly inspect the property prior to purchase. Joshua 18:8, we read, go and make a survey of the land and write a description of it. And in Genesis 13:17, go, walk through the length and breadth of the land, for I am giving it to you. We need to get a professional home inspection to determine the soundness of the home. Of special concern is the foundation. Jesus says in Luke 6:47-48, as for everyone who comes to me and hears my words and puts them into practice, they are like a man building a house. Excuse me. Who dug deep down and laid the foundation on rock. When a flood came, the torrent struck the house, but could not shake it because it was well built. And from Proverbs 12:7 we read, the house of the righteous stands firm. Insist on a home inspection. Look carefully for a good inspector with a great reputation for helping home buyers ensure a home is structurally sound and free of major defects. You can find a qualified house inspector through the American Society of Home Inspectors, or get a recommendation from your real estate agent or community members. Include a home inspection contingency that gives you a penalty-free exit from the deal if major issue is uncovered and the seller is unwilling to fix it before closing. With the contingency in place, you can withdraw your offer and usually get your full earnest money deposit refunded. The home inspection fee is non-refundable and typically paid by the buyer to the home inspector up front. It typically ranges from $300 to $500, depending on the location and the size of the property. Keep finances stable between contract and closing. Keep your credit and finances stable until you close on your new home. You may want to wait a few months before adding more monthly payments for big purchases to the mix. You should also keep your income stable. While changing jobs may benefit your career, it may complicate your mortgage approval. If you start charging up a storm before closing, you're throwing off your debt-to-income ratio and are at risk of the bank deciding not to lend to you. Comparing closing document with loan estimate disclosure. Lenders are required to provide you with a 5-page closing disclosure 3 days prior to closing. Take the time to compare it against the initial loan estimate disclosure you received to make sure you aren't being charged extra fees by your lender or other parties involved in the transaction. Come to closing prepared to sign a host of paperwork and with a certified check or cashier's check to cover all the closing costs. Finally, don't sign anything you don't understand or feel comfortable with. Ask questions and expect answers, and if you don't understand them, ask for better explanations. Closing documents. We read from Jeremiah 32, 10 through 11, 14 and 44. I signed and sealed the deed, had it witnessed, and weighed out the silver on the scales. I took the deed of purchase, the sealed copy containing the terms and conditions, as well as the unsealed copy. This is what the Lord Almighty says. Take these documents, both the sealed and unsealed copies of the deed of purchase, and put them in a clay jar or safe, so they will last a long time. Fields will be bought for silver, and deeds will be signed, sealed, and witnessed, because I will restore their fortunes, declares the Lord. Private mortgage insurance. If your loan includes PMI, keep track of your equity as you continue to make mortgage payments and the housing market continues to rise. Once you can establish 20% equity in your home, you can ask your mortgage servicer to remove the PMI from your escrow and payment. This will save valuable dollars as you continue to pay down your mortgage. Property taxes will probably rise after closing. Home buyers need to understand that property taxes likely will be reassessed based on their purchase transaction, which means taxes could potentially rise. Housing market uncertainty. Even experts struggle to predict trends in the real estate market. Like the stock market, don't try to time the housing market. Just be careful if you're in a housing market that turns into bidding wars and you are too eager to make a purchase. That's when the budget and important contingencies get thrown out with the window, and you could make a mistake you'll regret later. Instead, you can research metrics such as average days on the market before sale. The fewer those days, the more competitive the real estate market. Viewing your home as an investment. Stephen Keyes gives us a proper perspective on viewing our homes as inflationary protection when he writes, houses are often sold as wealth-building tools, a way to escape throwing money away on rent. It's important to realize that housing price appreciation represents an annualized appreciation of 3.5%. That's right in line with inflation over the same period. There will be booms and busts, but in inflation-adjusted terms, the average real appreciation of a single-family home is pretty close to zero over long periods of time. While your home's value probably won't outpace inflation, it's saving you money in the form of foregone rent payments along the way. Is buying a bigger home a better investment? Traditional thinking leads people to believe that buying bigger and bigger homes is no problem at all because the returns on their investment scale with the price. This simply isn't true. Price appreciation is gobbled up by inflation, so the only thing left in your return on investment calculation is foregone rent payments. The amount in rent doesn't increase when you buy a bigger house, so by spending more, you're diluting your return. As it says in Isaiah 49:20, the children will yet say in your hearing, "This place is too small for us. Give us more space to live in." Is buying a bigger home a better investment? Stephen Keyes puts things in proper perspective when he says, the logical conclusion is that buying a less expensive house costs you less money and makes you richer over time. It almost sounds like a common sense, but it is a fundamental point that is lost on too many people. The house you live in can certainly be a wealth-building tool, but it is important to have a realistic expectation of how it might perform as an investment. Dima Williams points out, over the long run, stock investing is often more profitable than buying a residence, especially after accounting for home ownership costs. Home value appreciation tends to be lower than that what the stock market will return or provide. Conclusion. You shouldn't purchase a home unless you intend to stay in it for at least 5 years. Before you begin looking for a home, get your finances in order. This includes a fully funded emergency fund, ideally a 20% down payment, and closing costs. Make sure your credit report is up to snuff so that you will receive the best terms on your new mortgage. Organize and update your documents prior to meeting with mortgage lenders. Shop a few different lenders in order to get the best rate and terms on your mortgage. Get a mortgage pre-approval letter from your lender prior to shopping for a home. The general rule is to limit your housing costs to 25 to 30% or less of your take-home pay. Do not use your home as an asset in your retirement calculations unless you intend to sell and downsize using the difference to invest for retirement. Action steps. Number 1, if you are considering the purchase of a new home, do you have your finances in order, including a fully funded emergency fund, a 20% down payment, and closing costs? Number 2, do you have a secure job and intend to stay in the home you're looking to buy for at least 5 years? Number 3, have you checked your credit reports and maxed out your credit score? 4, have you collected all the paperwork the mortgage provider needs to write you a pre-approval letter? Have you shopped different mortgage providers for the best rate? Do you have a pre-approval letter from your chosen mortgage lender? Have you locked in your interest rate? Have you chosen a community in which you would like to live? If you're planning on having children, what is the reputation of the school district? Have you searched the internet for homes in this area? And do they fall in your price range? Can you find plenty of housing options in this community within your price range? Have you found a buyer's real estate agent to help you with your search and to write the contract with, with appropriate contingencies? God bless your home buying experience.